Nvidia's latest earnings report, along with a wave of newly negotiated multi-billion dollar AI deals, has put a fresh spotlight on the company's massive cash pile. The Information's co-executive editor, Martin Peers, wrote a sharp piece on how Nvidia has actually been using that cash. He joins me now.
Hey, Anita.
Hi, Martin. Good to have you on.
Yep.
Martin, let's start by talking. I want to hear a little bit about the pace of NVIDIA's free cash flow growth, if you can just put that in perspective for me.
Sure. So in the 4 years between 2020 and 2023, they're NVIDIA's fiscal years, which end in January of each year. So it's really 2019 through 2022. NVIDIA did a total of 20 billion in free cash flow. Um, Last year, in the year ending January of this year, that grows to 60. And in this fiscal year, that will grow to 96.5. And analysts are estimating that over the next 4 years, NVIDIA could do as much as 850 billion in free cash flow. Now, I think that number is obviously very speculative because we don't have any idea how the business will evolve, but clearly their cash generation has just completely exploded.
How does that stack up, Martin, compared to other tech companies? I know you took a look at some of the other big tech giants and other inflection points in their history.
Sure. Well, I couldn't find another example, and of course, we don't have records going back that far. But I looked at companies going back about 30 years of the big companies, and I couldn't find another example where companies had grown that fast. In terms of the big companies, Google, for instance, last year did free cash flow of 73. This year, that's expected to drop to 65. Meta is, I think, this year expected to do 41. Next year, that's expected to decline to 25. I mean, what you have to remember is that the bigger companies are their free cash flow is declining because they're spending a huge amount of money on NVIDIA's GPUs. So there's this transfer of wealth from Google, Meta, Microsoft, Amazon to NVIDIA.
And just to be clear, you're saying going back 30 years, you couldn't find any examples of any other big tech companies or companies in the sector growing their free cash flow as quickly?
As quickly, that's right.
Got it. I mean, I think there's been a lot of discussion about and a lot of headlines about NVIDIA making these multi-billion dollar investments and commitments to invest in different companies in the sector. How did Jensen Huang, the CEO, talk about that on NVIDIA's earnings call?
Well, I mean, last week he was asked about this. He was asked about the amount of money he's expected to, or that the company is expected to make going forward. And his answer was, and he was asked, "How are you planning to spend it?" Part of the answer is buying back stock. They've started to ramp that up, but his main focus is on using the cash to grow the business. So that's, I think, the reason why he's been doing all these investments in companies like Anthropic and OpenAI, or at least he's announcing those. Most of those haven't actually been done yet. They've just been announced, and I have to sort of work out the details. But this is what is driving it. He sees competition coming from Google and other companies, and he's trying to forestall that by investing in companies to give them the money to buy his products. And that's a contrast to other companies like Google or Meta, which have for years thrown off an enormous amount of money, but they have used that money to diversify. Google, most obviously, has used the money that their advertising business has created. They've used that to diversify into the cloud and into cars and things like that. So NVIDIA is using the money it has to double down and to reinforce its existing business.
It sounds, Martin, from what you're saying, that NVIDIA is in a position of relative strength. But at the same time, there's been a lot of controversy over these AI financing deals that NVIDIA has been behind and how they're somewhat circular, and that they might signal that NVIDIA is actually just trying to increase demand and trying to stimulate demand. What's your view? Is that what you think Jensen Huang is doing?
I mean, I think it's complicated. If you look at the amount of demand that he has, the idea that these investments are there to sort of prop up the business is a little, um, I think, misses the point. He's not creating that much demand. I think what he's doing is using the cash he has to to sort of fight back competition. So, I mean, a really good example is we all know that Google is out there with its TPUs. Um, Amazon has its own Trainium chips. And when Nvidia announced this investment in Anthropic, that was meant to get that company to buy Nvidia chips. Until now, Anthropic has been buying chips from Google. Well, actually, sorry, has been using chips from Google and from Amazon. And so this is a way that Nvidia is using the money that it has to kind of fight back against the competition.
Well, considering the size of their balance sheet, I would not be surprised to hear another couple deal announcements maybe this week or maybe after Thanksgiving.
Yeah,
Either way,
exactly.
we'll have to watch. Thank you so much for coming on the show today, Martin.